Good morning. Happy Friday. All right. A little bounce continuing from that low there. It was kind of erratic, but got going yesterday. We talked about this downside shakeout. I don't know if I pointed this out pre-market yesterday, or I think so. We were talking about patterns, I think, yesterday in the room anyway. Um, we talked about was in part was that this head and shoulders kind of a bottom, suggesting a low. Was more of a shakeout kind of a pattern because the head is a V type of a bottom. Regardless, it tells us that it was a big rejection at that level, strong demand that ripped it up, and you kind of got that wide whippy shoulder on the right side there. And now it's getting a little more controlled. And I'm pointing out here is this pattern of bars um, starts to get tighter and more uniform, and it displays more of a confidence in the direction. You see another little downside shake out there. And so now it's come, these are S&P futures, got a little more to go, give or take. They're coming up to these pivot highs there. You don't know exactly where it's going to stop, but most times it'll reach those pivot highs or maybe get a little above it. We call greater than 100% retracement. So, and it looks good to go still. The 5 minute, there was a little pullback there and acceleration. Every time it accelerates, it opens up the door to, hey, is that going to be the point where it starts pulling back? Is demand strong enough to make it go sideways? You know, you don't know. You just know as it begins to accelerate like that, it's likely to stall. You can see it's stalling for the moment. The daily chart will come up to the same area that they're pointing toward. The top of the red bar there. There's a bunch of red bars in the way it came down. So it's going to be probably a point where it's going to not get much higher from there. So not looking for a big continued move, but it should go a little bit higher. And at the NASDAQ, coming up to that resistance area as well, kind of almost there actually, right? Already to that pivot high. And you'll see it accelerating, begin to stall there. I guess that pivot high must be that topping tail on the daily chart right there. And from there, I don't think it can do anything getting up into here today. But there is a void. Maybe next week, as we get in, we're at the end of the month. We had the bounce, the internals said, hey, you better be careful with the shorts. Maybe this thing's going to be able to turn. We'll see how much. It came down real hard. And so the end of the month, the beginning of the month, you've got that typical historical kind of bullish period as mutual funds get those automatic inflows. So maybe this can get a bit further, the beginning of next week. I'll know usually after a September like this, October is where you get the next down leg and then the low for the end of the year. And we're looking forward to that. So, as we go into, the end of today, we'll see how this closes. Is it going to close with a bottoming tail bar, which is going to suggest it's going to go higher next week? And of course, higher to where? And when it's got a void, it's not easy to tell where it's going to go to. That would be quite the distance, but we'll deal with that next week. So what do? You see, as it's going up, especially on the hourly chart, does it create a pivot, maybe in the middle of nowhere, meaning it's in the void, creates a pivot, which creates resistance that could be traded against. Fighters, always look at where they're at. No rejection there. And right in the middle of this green bar, gapping up above this high, gapping up into, you can see the hourly chart, the congestion right there, those pivots. Maybe can get a bit higher. I don't think it's going to get that much higher. So for next week, you always got to prepared, being aware of places things could possibly go to and why, and set alerts there. And there's this big unfilled gap in the spiders. So if this is going to follow through next week, there's other targets, but there's that big unfilled gap there. We got to deal with this area first, which I think unlikely it's going to get all the way through that today. And you can see the cursor on the hourly chart that it's right into that mess of bars right there. And we'll see how it deals with it. So we get our expectations in a line here that, this economic news, which seemed to be kind of muted as all the numbers that came out as to, wasn't anything significant that happened. But anyway, the market's following through on this bounce for now. And SPX, neither number got touched yesterday. And I suspect neither number will get touched today. So 38, 43.80, which is right at the beginning of that gap. I would go so far to say it's never going to get there. But as markets begin to move up, those premiums increase, and in this leveraged instrument increase often dramatically, and that's what makes it attractive for zero DTE, is that these prices change. Well, it makes it attractive as long as you're on the right side of it, because if you're on the wrong side of it, it'll give you heart palpitations because of that leverage. So you better be right. And it's rare that the numbers that we come up with by measuring, average true range, where prices are, what the trend is, where's there enough premium that it makes sense. And it's rare that the prices they get close, but they don't hit them. And so at some point, even with credit spreads, getting close means, the better part of, that battle is sometimes just getting out of the way, because it's just the way credit spreads is. You say, well, if it just doesn't go there, I get to keep the money. Well, if it goes there, maybe you're going to lose a finger, in a way to looking at it. So anyway, as far as this higher number here, and that's usually what I look for when markets are moving in one direction and those premiums get really juiced up. They always get pushed to like crazy, because I suppose crazy is possible, but most times the prices never get there, but people are buying those options and the juices get increased. So there you go. The Qs are holding up pretty well into this resistance. I noticed, that's unfilled gap there as well to be aware of. Right now, they are right at the top of that bar right there and holding steady. So that's relatively impressive. This is showing relative strength, and it's right there. And it's got that little unfilled gap. So unless this thing collapses at the open, the way it's holding here for the moment, it may make a little run to try and get into that gap fill. So keep that in mind. Of course, you can look at the usual suspects, Apple and Microsoft, and those that might be the drivers in NVIDIA, and see how they're doing. Yesterday, there was bullish price action in the semiconductors, which have gotten beaten down, and they're gapping up into some resistance. You can see the cursor on the hourly chart, but bouncing. It's going to stop dead somewhere because it's in a downtrend, and it's going to come down. It's either going to go sideways or retest. I guess I don't know whether it'll happen the beginning of next week, or we get that bullish price action in the first week of the month. Internals, down here still. Usually what happens is his breath gets to around 0, give or take, and then the selling starts to pick up again. We'll see next week. And a few days ago, we said, watch the transports down there at the 200. They got rejected right off of there. So some of the levels, sometimes they're just so obvious. It's like, how could anybody ignore after something's coming down like that, not to expect that they're going to bounce off of there? And of course they did. The Russell didn't get all the way down to the bottom of the trading range. You can see the big head and shoulders top. We'll be seeing what it does. Right now, again, it's just having this little bounce. Things got extended. Internals got to an extreme, and market's doing what they do. Just typical counter trend bounce. You know what? They made a big deal on the news. I heard, the other day, yesterday. Oh, oil is down. Where they were saying 2%, and I was like, all right, that sounds like a lot, but it's still in an uptrend, right? It did come down the day before; it was up quite a bit. But what's happening here, is that a little lesson in momentum. Strong momentum suggests it should go higher. It went higher, and now the distance between the highs is getting closer together. So it's losing upward momentum. It's still in an uptrend unless it violates the swing low prior to the higher high. And it is, you can see to the left there, at an area of resistance. It's coming down pretty fast now. So, the analysis is relatively simple once you get, head around it. Just what's so hard about looking at a whole bunch of bars moving in a fluid manner, and that kind of strength suggesting prices will go higher. And the next step is look to the left. Well, is there got room to go higher? And if it does, it's likely to go higher. Gold whipping up here, but that had a breakdown, so we'll see. There's really nothing to do there. Interesting though, silver is showing relative strength. I'm not sure why. I'm sure there's a reason, but it's showing some great relative strength, meaning it didn't break down under this base. Now it's still just in a sideways trend, just marking time, going nowhere. But I thought that was interesting that it was showing some relative strength, and just the way it trades, so whippy back and forth. Unless you're, in my opinion, unless you're just trading it intraday, it's just a stay away, similar to Bitcoin, which has just been crazy back and forth, back and forth. So we stay away from stuff like this. No sense in trying to be a hero, trying to figure out what this thing is doing, when there's other things that are much easier. All right, interest rates pulling back a little bit. Market likes it, of course. It's extended. It's coming up. Put that on a monthly. And just look to the left. You see all that congestion there. And we put this line on there several weeks ago, and it's getting close. Those sellers coming in, and we can think about all the economic reasons why this might be pulling back, or the news, but technically it's just reaching its destination. We'll see how far it pulls back, and it got extended. So that's your 30-year, your 10-year, pulling back. TBT, which is, kind of a mix. This is like 20 years or so. That's pulling back, and it's into this congestion. Are gap fills the type of void most likely to magnetize or pull the index toward it? Well, unfilled gap, Ed, is a void by definition. So how do I say this? With all the indicator-based mythology out there that confuses the crap out of so many, um, it's more about just what's to the left, support and resistance. And um, from my point of view, while I know institutions they pay for analysis like Elliott waves and fibs because, well, they got the money to spend on that kind of stuff. But you watch the price action, and it's like if something is moving into a void, most times it just doesn't stop until it closes it. Now there are jiggles along the way, but overall the trend is maintained. It's not a straight line move, especially as you go down to lower time frames. So as prices begin to move in the direction of that void, we have a bias that it's going to fill that void until something happens to tell us that it's unlikely to happen, and that's violating an area of major support. So when you say magnetize or pull it toward it, what's moving toward it is a belief by institutions and traders that prices can get there, so they keep buying or selling. All right, so there you have it. That's what's going on here today. The dollar's pulling back a little bit. We covered this a few weeks ago. The euro is on the monthly chart, but it's coming down to this support there. Again, doesn't matter what you trade, currencies, commodities, stocks, just about looking to the left in the trend. So it's getting the bounce there. Dollars pulling back, interest rates pulling back. Market likes it. We'll see if it continues for how long today and into next week. All yours, Dan.
Good morning. Sam made a comment yesterday in the green room about all his positions. I think he said something like, hey, in one day I went from 80% short to 80% long. And guess what? We did the same thing. And that is the beautiful thing of swing trading. Here, just looking at the spiders and igniting, engulfing, closing, breakdown, we went 90% short. Bottoming tail, trail stopped, started nibbling more yesterday. And let's see, in our weekly options trader, we have 6 open positions, 100% of them bullish. So we did the same thing because he's been with us for years and we follow the same methodology, but that's how we make money on the ebbs and flows of the market. So I was fully bullish yesterday, discussed in last night's video. And I just said, ideally, we would get an inside day today, and then that would make it a pound the bullish trades for Monday. But market doesn't care what I want. We're getting the gap up now. So I'm still bullish. I posted a couple trades pre-market, and our open trades, if the couple that were getting nice gap ups, then I'm going to be looking to take half or all. Goldman here, I just posted. My alarm just went off here at 332. So if it is gapping there, that's a pretty darn good gap. So I'm minimum, I'm going to get at a half. And I say 5-minute low just to give, well, for 2 reasons. One, in case it wants to rally a little more. And number 2, you just got to let options tighten up a little bit in the first few minutes. Unless it's something like spiders, AMD, the massive liquid ones, Facebook. Then you can, wait probably 15 seconds. So that's that. Here's another one, TTD, we put on yesterday, put spread, gapping up here. Let's just take our money. I mean, now it's up a lot near our target. All we were saying was we're trading 1 to 3 day bounces. And if we're getting a gift of the bounce and a gap, well, then take it, move on. So that one's good. NOW we did yesterday, nice gap reversal, major support. But I posted a new trade there. We got 2 oil things. ARM. This was an ARM. We had a beautiful new IPO, beautiful bottoming pattern on an IPO. Let's go to earnings here. Not many of them. BlackBerry doing nothing. No interest. Mountain. Hey Sam, I don't know if you're here, but Sam and I trade a lot of earnings trades before earnings, even if I don't give them all to subscribers. So I did a condor on this yesterday. Let's see what strikes I have. Sam didn't do it just because he doesn't like, he likes short term for obvious reasons. So do I. This one was 21 DTE, but if the pattern's good enough, I'll still do them. So it was the 210s. I mean, look at this, folks. The 210s. What do you think the odds of this gapping down the 210 is on earnings? Not saying I can't. You'll never hear me say that. And 260. So I'm going to make money on the volatility crush. And when you short options, the goal is you don't want a big gap. And we did 2 yesterday or Wednesday, but reported yesterday, and then they were big gaps in our face, and we still made money because the volatility crush was greater than the directional loss against us. So I definitely got to give this one 5-10 minutes for those spreads to tighten up, but I sold it for $1.75. I think I got a bid out there right now for 20 cents to try to close it. Nike here, we were very tempted to sell out of the money puts on this. Just down so much. Things that are down this much daily, weekly into earnings, even if it did gap down a lot, I would be 100% bullish bias as an exhaustion gap. But gapping up here, that's a monster gaps, and there's nothing to do with it. But as we always do, look at the usual suspects in the sector. So FL here getting a gap. Hibbs, there's no pattern there. Lulu, that's Lulu's competitor with Nike. Clothing, tennis shoes. So yeah, if any of you want to do that exercise, see if there's any in that sector. Yeah, Greg. Greg, I don't remember this one. I
talked about it in MT Live that it was becoming a bear sandwich, and then it kind of backed off during lunchtime and came back near the end of the day.
All right, well, I did not have an alarm, but yeah, that I would have been all over that. Would have been over this yesterday, over Wednesday's high, would have been a no-brainer. Bear sandwich breakout. We're going to be doing an MT Live coming up here in a couple of weeks on red and green bars ignored. So I'll do a screenshot of that. Chris, hey, welcome. It's not a list per se. It's just I go over earnings first. I go over anything that I've typed in here as a potential gap news stock, and then I go over my remaining watch list from yesterday. I'll go over anything you all want to look at. So the answer is I don't label it a gap list. It's just part of my morning routine here of looking for tier 1 trading candidates. DKS, absolutely, but that one's not a good pattern, Patrick. Gap and resistance, but maybe it could be the start of a breakdown failure if it can go sideways at resistance, inverse head and shoulders. A number of the Fangs are usual suspects for 0 DTE. I got Nike on my list. Microsoft, a little mini Climo here, gapping up. Tesla, I saw up. Nice 4-bar turn. Meta and Google. I like every single Fang as a 0 DTE candidate except for Apple. We're actually we have a barefoot calendar spread on this. We covered a third at yesterday's low. So all of, but I got to go through the checklist and see what premiums are like. Yeti here made a new low, but bounced off the 50. That could be a day trade long, 30-minute high. Oh, one more earnings here. Kook and CCL. They're just slopping around doing nothing. I got no interest. Baidu I posted as a put spread, gapping up over this little consolidation here, the void. So I got a 4 bars of support. And it's, see, this is a good example. I would not actually, this is a directional trade. It's a mess. It's a ADR, it's gapping, it's China. But look, it's a gap breakout. Put spread. Sergey, Neo. It's in a downtrend at this prior high. Put spread under the week's low, Sergey, if there's any juice, which I doubt. But otherwise, I can find substantially better patterns. Here's a couple on Sam's list he gave me. Werby breakout, a bottoming pattern here. Now these are beautiful put spread candidates, but there's just no juice. You know, when we do MT live on bottoming patterns, this is beautiful. Broke out, failed, breakdown, failed, higher low, closing breakout, black 20. That's a great put spread candidate if they had juice at the 2750 strike, and they don't. Oil's been strong, kind of a sloppy bull flag here, but PSX looks higher. QTRX closing breakout, kind of a 1, 2, 3, but I don't like all the overlapping bars. So again, it would be a no-brainer $25 put spread if there's any juice down there. AVT breakdown failure, price void. This would be a great 1, 2, 3 for Monday. So what does that mean? It means if we get an inside bar in the upper third today, then Monday we buy over the high of the 2 bars. Got a price void. Now look at Ross, middle chart. Ross was a Climo yesterday. You know, now it's moving. I posted it yesterday before lunch when it was down here. And then, you know, when I came back from lunch, I noticed the market broke out. And I'm like, shoot, I was wanting it to go sideways. And then I'd be adding a lot more trades in the afternoon breakout. We're short $100 puts here on Ryder. My up alarm just went off. Here's another beautiful red barred Nord. Charts, I see good examples and I just write it down and write it up later. All right, Goldman, let's see where we're at. Okay, see, it's not gapping up to 332. So it's still, so I'm not going to be covering half. But it still looks fantastic. It's a 180 reversal on major support.